Hello, friends. Welcome to the Weekend Investing Daily Bite of 12th of March. Markets not really going anywhere. Uh, US markets are now in a doldrum. Has Trump failed? Is the topic of discussion today in the second half of the video. Do read the disclaimer and subscribe to the channel if you haven't so far. Where is the market headed? The market has been flat now for almost five sessions. The closing has been within 50 100 points, so it is giving a feeling that market doesn't want to go further down, not at least as of now, and a flaggish formation is happening after this rise, so which is currently looks quite good. Nifty 50 down 0.12%. This last 2 3 sessions, especially in the light of the US markets collapsing and other global markets also not doing so well, looks like market is fed up of going down. Nifty Junior also absolutely flat for the day. It did go down, but it recovered just like yesterday. We opened cap down and closed in positive. Today we went down during the day but closed back at 0.01%. Mid caps down 0.5% today. A wider variation in mid caps, but still pretty much in that ballpark. And small caps down 0.2%. Nothing really lost big here as well. So small caps also are doing okay. Bank Nifty tried to go up but gave up some of the gains, closing at 0.42%. The scare of IndusInd Bank seems to be already behind us. Gold is absolutely flat. I think gold is waiting for some cue for a big move. Which way I don't know, but it does look like a flag formation. And if that is true, we are looking at pretty high targets on that. Market breadth is not so good, but it really did not show on the indices that, for instance, in small cap space, you had only 29 gainers versus 71 losers. Small cap 50 also, was skewed towards the sell, but overall, the indices didn't show as much red. The major red region was the IT sector. Infosys losing 4% on Infosys. Wipro 3 These are big companies, big cuts are there. So big market caps have been lost. Uh, Besides ITC, other FMCG counters lost big also. Hindustan Levers, Nestle doing 2.5% down. Consumption stocks like Asian Paints down 1.5%. You also had Bharti Airtel down 1.2%. HDFC Bank, Kotak Bank, these were the stocks that were pushing the index up today. In the Nifty Next 50 space, some Adani stocks. So basically, energy orientation, some sporadic stocks like Divi's Lab, Indigo, Geofinance, these were also up, but you had a reverse move in Lodha, which was gaining very smartly yesterday. LTIM, Naukri, all IT related stocks getting smashed down. HAL down, TVS Motors, Zydus Life, ICICI General Insurance, all down today. Sectoral trends, you can see IT down 2.9%. This week we've lost 4.6. This month we've lost 13% on IT stocks, and that is the highest loss for the last 1 month. Uh, just a little behind is capital markets at minus 12%. So for the last 1 year now, IT stocks are in the red. Very few sectors remain which have a more than a double digit lead, but it's all red for 3 months and 6 months as well. So IT, which is largely dependent upon the US markets also as a marketplace, is feeling the shivers, and more AI experts are coming on and saying that coding is, for instance, somebody was saying coding will go extinct within a year, where human coding and all the other you know uh, forms of coding will be done by AI, at least the majority of it. So that will really have a big impact on India IT companies, the larger ones at least, which are not in a very niche areas but are doing mass market kind of services. IT, you can see, is down from 46,000 to 36,000. So that's a very big cut. If I had show you the longer term chart, IT stocks net now have not made anything over 4 years. So at least the large cap IT stocks, Infosys, TCS, and even the IT index. And Trump has something to do with it for sure. Um, the Trump move started sometime in October, where it was clear that Trump is coming into office. So a lot of trends started at that point of time. Many of those trends have reversed, which had gone up, but many which had gone down are yet to reverse back up. And that is the sort of the irony of it all, that if all trends were to revert back to October, then India would have been much higher, but that's not. So this new term has been coined, Trump's session. Instead of the recession that's coming, economists are warning $4 trillion have been wiped out from the market after Trump's moves seem to be not working. US is on the brink of a downtrend. Um, there are a lot of concerns about economic uncertainty, because if you shut down supply lines, you're saying 50% tariff on steel coming from, let's say, Canada. Overnight, you cannot create a replacement of that in the US. So what happens is that the domestic buyer actually has to pay much more. So a lot of these regulations that are coming through, or new policies, are going to take a lot of time for uh, to come into practice, where it may become beneficial for the US, and during that interim it will hurt the supplier and it will hurt the US buyer as well. So stock markets are in complete turmoil, because every day Mr. Trump wakes up and he has a dream of what to do the next day, in terms of which country to target and what sector to target. The unpredictability of that is basically the problem of the market, because markets don't like uncertainty. Markets like at least the regime to be stable and predictable, and that shakes the uncertainty shakes the investor confidence and the business dynamics. Economists are also slashing forecasts amidst this trade conflicts. Um, and basically financial markets are suffering losses because of the confidence loss in this entire thing. Goldman Sachs has raised the probability of a US recession, although it is still low. JP Morgan Chase says it's 40%, Goldman Sachs says it's 20%, and Fitch says recession threat is real. So while we may say that we've already fallen, so whatever happens in the US, let it happen, but that's not the case. I mean, if US really hits recession and takes a while to come out of it, I think the entire world will pay for it also. So don't be smug about the fact that we've already come down 15, 20, 25%, and hence nothing worse can happen from here. That is not the case. um, White House, however, remains optimistic. It may just be a lip service that they're doing. They're saying market downtrends are temporary blips. Uh, and he says this is a period of transition. So some people are also reading this narrative as the fact that Trump is wanting stocks to go down, markets to correct, and to go to uh, more to a situation where they the Fed is forced to make significant cuts on interest rate, because a huge amount of debt is going to roll over in the next 6 months. So at the current interest rates of nearly 4.2 odd percent on 10 years, if you have to roll over to the next the debt to the next 10-year period, it is going to remain expensive. But if they are able to bring down the interest rates, then the rollover cost is going to go low. So that is another conspiracy theory that is going on, that this is motivated to the extent that the current administration wants the stock markets to come down right now. The dollar index has been falling, so this you can see very, very clearly, that as soon as Trump was known to come into office, dollar index rose from 100 to 110, and then it has started to unravel, and we are already down to 103, and almost this entire cycle is going to get completed if we keep going further down. So this whole thesis of money moving into the dollar is actually reversing now. So there is more, at least, likelihood that foreigners may not have that much of a intent to keep selling India. At some point, that buying may also come back. uh, S&P 500 and Nasdaq recent performance have been poor. So since let's say October here, we are down 3.5% since election results, 9% drawdown since all-time high. This is the S&P 500 index. So S&P 500 index is now pretty much at the same place where it was in July. So the American investors are also hurting. Some Indian investors will take heart in that everybody's hurting. So it's all okay. Uh, Nasdaq recent performance is also extremely a sharp down move here. You can see 22,500 roughly going to 19,500. So We have come back to again June July levels. 12% is the drawdown. US tech stocks, Tesla, which was, which ran up from $250 to almost $500, has come down to below where it started post the October journey. And this complete cycle has reversed. 53% is the drawdown. So, you can sort of sympathize with Elon Musk for his portfolio to have gone down 53%, while yours is probably doing much better than that. Amazon also down 20%. Um, it had gone up 34%, is now down 20%. Meta is down 20%. Um, Microsoft is down 16%. You can see that many of the stocks are actually below the election day results also. For instance, Alphabet is also has come back to where it was when Trump's announcement was there, down 20%, and many other indices which actually have gone up have not returned also. So, for instance, EU stocks, most of them, Germany, for instance, is actually up. It's not really come off. A slight 2 3 day correction is there, but it has not really come down like the US markets. UK, however, it has come down, and it's virtually 2.5% above since October. So, most of the gains are given up. Um the Financial Times also has reported that the Trump's trade is not really working for America, but Germany has really benefited out of that narrative. Euro has been rebounding. It's 4 months high against the dollar, so that dollar index going down is a very real thing that is happening across. India, of course, has been losing since October. Uh, we can say that it coincided with Trump's announcement or expectation of Trump coming into office, but India has this trend has not changed at all for India, and that probably should change now because the global trends which markets were going up have now started to come down, and hence a reversal trade from here for India is very much possible. As and when it happens, we will see. But right now, we are seeing no sign of that. China, since October, has been a completely flat. So while India got really badly hurt, China really hasn't moved since then. Russia is also up since October. So Russia is also doing well. So we are very specific in terms of our markets not doing well. Japan is down about 5% since October. These are some of the other trade assets which had rallied very hard on Trump's announcement. For instance, some meme coins were there, Millennia meme coin, official Trump coin. They are both down 90% and 75% from their peaks. Trump media, the stock itself is down 50%. Tesla is down, now it is down 53%. Bitcoin is down 22% from its high, and S&P 500 is also down. So this entire trade that was built on the back of President Trump has collapsed. Private equity credit stocks like Blackstone, KKR, they are also hurtling down since January, 20 to 30% down on private equity or credit starts also. So basically, nobody is having confidence that the steps that are being taken in the White House are going to lead to any benefit to neither in the American market nor elsewhere. So, if we actually see it from a perspective of momentum, for instance, so investing on headlines is like chasing shadows. So, by the time you act, the opportunity is gone, and if you don't have an exit plan, profits are paper gains. So, like for instance, if one had bet big time in terms of betting big on American market when the uh, president came into office or something like that, you would have seen that they lost big money there. Bitcoin was gaining big time before the announcement of the president coming into the White House. Then there was a strategic reserve that was announced for Bitcoin that also pulled the Bitcoin up. But then post that, it has just slumped. So narratives are basically, just only helping, sellers get good buyers to exit, and buyers are getting stuck, and buyers, most of them don't have any exit plan, so they will keep waiting for their price to come. That is the problem. So key takeaways here is that news driven trades are lagging trades. So always follow the price. If price is telling you that the trade is coming off, get out of it. If the price is telling you the trade is getting built, get into it. So headlines can always, most of the time, be doing a cross with the price trend. So a lot of times you have good news in narrative, but price is coming down. For instance, right now the good news is that America is going to become great again, but the prices are coming down. And hype, once it is made, it fades and reality remains. So stocks that rally on political or economic narratives can correct just as fast, just like we saw in the case of Tesla, for instance, 250 to 500 and back to 250. And then of course, no exit plan means no profit. So entering a trade without any strategy can make investing into gambling, and you really don't want to do that. So that's where we are. There's a complete global turmoil. Trump has, I would say, completely disturbed the equilibrium of the markets. America is against Europe now. America is against Mexico. America is against Canada. America has a very weird policy against India. India also doesn't know where to go, what to do. I mean, we've had a minister go and we couldn't really break through any negotiation. And now they are sending JD Vance, who is a very tough negotiator, I think, to India, I think next month. So India tariffs are still in the open. What kind of a tariff settlement will happen between the two? And there is just complete, I would say, uncertainty and chaos. And in those situations, no predictions, forecasts are going to work. Just keep following price. If the price tells you something is working, be with that, and once it stops to work, you need to get out of that. That's sort of the most sane way of working. For instance, gold is right now telling you that there is no problem. Gold is sticking to its near highs and staying there. So that is where the stability is right now. Stocks are telling you need to get out or get into defensive stocks. And that's what's happening. So thank you so much for watching. Do like or share these videos, and do subscribe to the channel. Thank you. Bye bye.